A confusing component of an employer's workers' compensation policy is the Experience Modification Factor. Employers watch it increase and decrease from year to year. The only thing certain is that higher Experience Modification Factors increase costs and lower Experience Mod Factors reduce them. What's often missing is an understanding of how the Experience Mod Factor works and what you can do to manage it to the absolute minimum. Employers intuitively suspect that if they have injuries, their experience mods will go up, and if they reduce or eliminate injuries, they will go down. At a basic level, their intuition is correct, but there is much more to know and do to actually control workers' compensation costs. The use of the experience mod causes workers' compensation policies to behave more like a line of credit than an insurance policy. Ultimately, in almost all instances, employers pay for their employees' injuries. In effect, because of the use of the experience mod, employers are simply financing their injuries, not insuring them. Employers' perceptions of workers' compensation change when they grasp this analysis. They recognize clearly and quantifiably that they themselves ultimately pay for employee injuries, and the insurance company is just financing them. As a result, driving down injury costs makes the employer more profitable and competitive. That's why employers need to know what their lowest possible experience mod is. Many employers are amazed when they discover that their mod could be as much as 80 points lower than it is. When employers see their lowest mods compared to where they are now, their focus shifts even more. The gap between costs generated by the current mod and the best possible mod is a controllable cost. A solid business objective is to approach or attain the lowest possible experience modification factor. When this gap is exposed, it becomes apparent that getting quotes on workers' compensation has little to do with reducing costs. Going out to bid actually limits the employer's cost reduction method to what the insurance marketplace and pricing cycles offer them. A reduction in a rate from one year to the next may have minimal or no impact on the employer's total cost. For example, the rate may decline by 15%, but the costs increase by 30% because of an increase in the experience mod. In order to reduce costs, employers must move beyond the bidding process and the basic commodity transaction of placing insurance. They need and should demand assistance with the implementation of practical and proven methods for reducing your experience modification factor. Employers that shift their thinking and view workers' compensation insurance as a financing mechanism are on their way to reducing a mandatory cost. Less attention should be paid to going out for bids and more devoted to those factors that actually reduce costs and increase profit. The key is changing your perception of workers' compensation and then taking the steps that can make a dramatic difference. Once you get to know us, you'll see that Van Beurden Insurance has the experience and the integrity you deserve. We'll enjoy the opportunity to provide you better insurance solutions. Ask us for an estimate or quick quote. I'm Mark O'Brien, Vice President, Van Beurden Insurance Services. Better insurance solutions. It's what we do.